5 Reasons Dave Ramsey is Wrong About Credit Scores. Dave Ramsey has the financial means to remain credit invisible. However, having no credit can make life expensive and difficult for average people. In this video I will share with you 5 reasons why Dave Ramsey is wrong about credit scores. Before we dive into it, please don't forget to give a thumbs up to this video, comment, and subscribe to my YouTube channel. If you're ready, let's go. Let's be very clear. Dave Ramsey does not need a credit rating. For that he also claims that you do not require one either. The anti-debt activist, who is worth at least $200 million, refers to FICO ratings as "I love debt scores." He takes pride in the fact that he has no credit. Ramsey has motivated countless individuals to pay off their debts, which we admire. However, he can afford to be credit invisible. If you're an average person, not having a credit score makes life much more expensive and complicated. Here's where Ramsey is correct regarding credit scores: they do not represent your total financial situation. Doubling your salary or savings is beneficial to you financially, but it will have no effect on your credit score because a credit score only considers how you manage debt. If, like Ramsey, you don't have a credit score, it's likely that you haven't utilized credit in the last 24 months. As a result, credit bureaus frequently lack sufficient information on you to provide you with a credit score. However, you do not need to be in debt to have a credit score. In fact, opening a credit card and paying off the entire sum each month is one of the finest methods to build excellent credit. Here are 5 reasons why everyone who isn't a multimillionaire should disregard Ramsey's credit score recommendations. 1. You'll pay deposits for everything. Forget about having a 3 to 6 month emergency fund. If you don't have a credit card, you'll need to save a lot more money because you'll have to pay deposits on almost everything. Expect to pay the first and last month's rent, plus a security deposit, as well as deposits for utilities, internet, and mobile service. 2. It will be difficult to get a mortgage. People who need a credit score, according to Ramsey, are those who intend to take on more debt. That is partially correct. A good credit score allows you to obtain the best financing rates for large purchases such as a home, which few individuals can afford to pay cash for. A mortgage with no credit score is available through a process known as manual underwriting. This option is most likely to be available at smaller banks and credit unions. However, expect to provide extra documents and a longer approval procedure. You can also anticipate a larger down payment. This can be beneficial if it prevents you from purchasing an excessive amount of property. However, when buying a house you can afford, a big down payment demand can keep you renting for a longer period of time. That damages you in the long term because your housing payments do not contribute to your equity. 3. Credit cards are usually the safest way to pay. When someone accesses your credit card account, they are technically stealing money from your bank when they make fraudulent transactions. They are, however, stealing your money when you use a debit card. In practice, if a hacker drains your account, your bank will most likely reimburse your money, although the procedure could take several days. This could leave you short on funds or behind on your bills. Credit is the most secure way to pay in instances where your data is at risk, such as while shopping online or paying for gas at the pump. That doesn't imply you have to carry debt when you use a credit card. If you like, you can pay off your balance every day. 4. Travel is challenging without a credit card. You can probably use your debit card to check into a hotel or rent a car. However, they will usually place a temporary hold on whichever credit or debit card you use. Its purpose is to ensure that you have enough money in case of damage. That's money you won't be able to spend until the hold is released, which could take several days after you check out of the hotel or return the car. If you're paying using credit, as long as your card isn't maxed out, it won't be an issue. However, if you pay with a debit card, a hold might prevent you from accessing funds for basic expenditures, or, worse, force you to overdraft. 5. Credit can be a valuable tool in an emergency. In an ideal world, you would have an emergency fund that could get you through any financial hardship. In reality, though, building an emergency savings might take years. It's not a good idea to use credit cards to get through an emergency. However, in a crisis, it may be the least bad option. Having a credit card can help you avoid risky options such as payday loans. As a bonus, I will share with you how to get a credit score if you don't have one. If you know you'll be tempted to rack up debt because you have access to credit, Ramsey's advice to live without a credit score may be the best option. If you have a serious spending problem, the hassle and higher deposits are well worth it. However, for the vast majority of people, the benefits of credit much outweigh the drawbacks. If you don't have a credit score, either because you've never used credit or because you haven't had a credit card in a long time, opening a secured credit card is the simplest method to get one. You'll pay a refundable security deposit, which will become your credit line. After around a year of on-time payments, you have a decent chance of being approved for a normal credit line. Limit your purchases to no more than 10% of your credit limit, and pay off the bill in full each month, or even immediately if you're anxious about going into debt. Access to credit, with a little self-control, will not lead to debt. However, it will make life easier and less expensive. That's all for this video. I hope you enjoyed it and thanks for watching. Please don't forget to like, comment, and subscribe to my YouTube channel so I can continue to provide you with valuable content like this. See you next time.